I'll start with something that might surprise you. The first $100,000 is the hardest money you'll ever earn. Charlie Munger used to say that all the time. He'd say, the first 100,000 is brutal, and he was right. That first $100,000 is brutal. It feels impossible. You save and save, but the number barely moves. The compound interest is so small, you can hardly see it. You start wondering if you'll ever get there. But here's what I've learned over 94 years. Once you reach that first $100,000, everything changes. The math starts working in your favor. Compound interest becomes visible. Your money starts making real money. So today I want to talk about something practical, not theory or philosophy, but 3 concrete ways to accumulate your first $100,000 in 2 years or less. Now, I need to be honest with you. When I say easy, I don't mean effortless. I mean straightforward and simple to understand. The path is clear, but it requires work. It requires sacrifice. It requires discipline. Most people won't do what I'm about to tell you, not because they can't, but because they won't. They'll read this, nod along, and then return to their comfortable habits. In 2 years, they'll wonder why they're still broke. But if you're different and willing to be uncomfortable for 24 months, you can earn $100,000. That $100,000 will change your life. It will set you on a path to real wealth. So let's get into it. The most powerful way to accumulate $100,000 in 2 years or less is to become obsessed with your savings rate. Let me break down the math for you. If you want to save $100,000 in 2 years, you need to save about $4,167 per month. That's almost $50,000 a year. That's a lot of money. You might be thinking, Warren, I don't make enough to save that much. And maybe you're right with your current income. But here's what most people miss. Your savings rate isn't just about how much you earn. It's also about how much you keep. Let me give you some examples. Let's say you make $70,000 a year. After taxes, you're probably taking home about $52,000. To save $50,000, you'd need to live on $2,000. That's extreme. That's like living like a monk. But what if you made $100,000 a year? Your take-home pay would be about $72,000. Live on $22,000 and save $50,000. That's tight but doable, especially if you're single and willing to make sacrifices. Or what if you made $150,000 and took home around $105,000? You could live on $55,000 and save $50,000. That's actually pretty comfortable for one person. You're living on more than the median American household income. So the first thing you need to do is figure out if you can save $4,000 a month with your current income. If yes, great. If not, we'll talk about increasing your income in the second method. Assuming you can save $4,000 a month, here's how you can become obsessed with your savings rate. I mean obsessed. This must become your number one priority for 24 months. Nothing else matters as much as hitting your $4,000 monthly savings goal. First, track every single penny you spend. Every penny. I don't care if it's 50 cents for a candy bar, write it down. You categorize it. This way you'll know exactly where your money goes. Most people have no idea where their money goes. They make decent money, but by the end of the month it's gone. They couldn't tell you what they spent it on if their life depended on it. Wealthy people, however, know where every dollar goes. It's not because we're cheap, it's because we're intentional. We make conscious decisions about spending instead of letting money flow out unconsciously. So get a notebook, an app, or a spreadsheet. I don't care what you use, but track every single expense for a month. At the end of the month, you're going to be shocked. You'll see how much money leaks away on things you don't remember buying. Once you know where your money goes, you can start cutting ruthlessly. Ruthlessly. For the next 24 months, ask yourself about every expense. Is this necessary for survival and functioning? Or is it delaying my $100,000 goal? Housing. This is probably your biggest expense. Can you reduce it? Could you move to a cheaper apartment, get a roommate, or move back in with family temporarily? I know the last option sounds terrible, but we're talking about 24 months. 24 months of discomfort in exchange for $100,000 and a lifetime of wealth. I lived in a tiny apartment when I was young. It wasn't glamorous. It wasn't impressive, but it was cheap. Every dollar I saved on rent was a dollar I could invest. Transportation. Could you sell your car and use public transit, bike, or walk? If you must have a car, can you downgrade to something that's cheaper, older, and more fuel efficient? I've never owned an expensive car, yet I'm one of the richest people in the world. The car you drive doesn't determine your wealth. Your savings rate does. Food. This is where most people waste enormous amounts of money. Eating out, ordering delivery, buying expensive groceries, and wasting food that spoils. For 24 months, you need to eat as cheaply as possible while still eating healthily. Cook everything at home, buy in bulk, make simple meals with rice, beans, chicken, and vegetables. Don't eat anything fancy or expensive. Don't eat out unless someone else is paying. Can you save $500 a month on food, $1,000? I bet you can. Most people spend far more than they realize on food. Entertainment. This one's easy. Cut it to nearly zero. No concerts, sporting events, bars or clubs. No expensive hobbies. For 24 months, your entertainment consists of free activities, library books, YouTube videos, parks, walking and hanging out with friends at home. People will think you're poor. Let them think that. You're becoming wealthy. There's a difference. Subscriptions. Cancel everything that's not absolutely essential. Streaming services, gym memberships, subscription boxes, all of it. If you need to work out, do body weight exercises at home. If you need entertainment, use the free options. Clothing. Don't buy anything for 24 months unless something falls apart. You have enough clothes. You don't need more. Every dollar spent on clothes is a dollar not going toward your $100,000 goal. I know what you're thinking, Warren. This sounds miserable. I don't want to live like that. And I get it. It's not fun. It's not comfortable. But here's the thing. It's only 24 months, 2 years. That's it. At the end, you'll have $100,000. You'll have the foundation of wealth. You have something that 90% of us don't have. More importantly, you have momentum. You have proof that you can accomplish difficult tasks. You have discipline. You have habits that will serve you for the rest of your life. Most people aren't willing to be uncomfortable for 24 months. They want comfort now. They want to enjoy their money now, and that's fine. But they'll never be wealthy. They'll spend their whole lives wishing they were rich, yet they'll continue to make choices that keep them poor. That's the first method. Become absolutely obsessed with your savings rate. Cut everything you can. Live like you're broke, even if you're not. Save $4,000 a month or more, and in 24 months, you'll have $100,000. The second way to accumulate $100,000 in 2 years is to dramatically increase your income through side hustles and overtime, which works even better when combined with the first method. Let me be clear. Your main job probably won't earn you $100,000 in 2 years unless you're already earning a high salary. Even if you're making good money after taxes and basic living expenses, saving $4,000 a month is tough. So you need to make a lot more money. The fastest way to do that isn't getting a raise at your current job. It's adding income sources outside your job, side hustles. This is where young people today have an enormous advantage over my generation. When I was young, the ways you could make extra money were limited. You could get a second job. You could do odd jobs for neighbors. Today, however, the internet has created thousands of ways to make money. And I'm not talking about get-rich-quick schemes or scams. I'm talking about legitimate ways to sell your skills and time for money. Let me give you some examples. Freelancing. If you have a marketable skill, writing, graphic design, programming, bookkeeping, you can sell it on platforms like Upwork or Fiverr. For example, let's say you're a decent writer. You could take on freelance writing gigs at night and on weekends. You charge $50 per article. You write 2 articles a night, 5 nights a week. That's $500 a week, $2,000 a month, and $24,000 a year. Add that to your savings from your main job, and suddenly earning $4,000 per month becomes much more achievable. Or let's say you know how to code. Even if you're not an expert, you can build simple websites for small businesses. Charge $1,000 per site. Build 2 sites a month. That's an extra $2,000 per month. That's $24,000 a year. The key is to find something that people will pay for that you can do in your spare time. It doesn't have to be glamorous. It doesn't have to be your passion. It just has to make money. When I was young, I had all kinds of side hustles. For example, I sold golf balls that I found on the course. I rented out pinball machines. I did whatever would generate income. It wasn't fun, but it helped me build my capital so that I could start investing. Overtime. If your job offers overtime, take every hour you can get. I know you're tired. I know you want your weekends, but this is only for 24 months. Work 60 or 70 hours a week if you can. You'll get paid time and a half or double time. Let's say you make $30 an hour. 40 hours a week is your normal $1,200 a week. But if you work an extra 20 hours at $45 an hour, that's an extra $900 a week. That's an extra $3,600 a month. That's $43,000 a year. Working 24 months of overtime could add $86,000 to your $100,000 goal. That's huge. Gig economy. Drive for Uber or Lyft on weekends. Deliver food with DoorDash in the evenings. Do TaskRabbit jobs on Saturday mornings. These apps make it easy to turn your spare time into money. For example, let's say you drive for Uber on Friday and Saturday nights for 6 hours each night. You earn $25 an hour after expenses. That's $300 a week, $1,200 a month, and $14,400 a year. That's not enough by itself, but it can be combined with cutting expenses and working overtime. You're getting close to that $4,000 monthly savings goal. Sell stuff. Most people have thousands of dollars worth of stuff sitting around their homes that they never use. Clothes, electronics, furniture, collectibles, whatever. For the next month, go through everything you own. Ask yourself, have I used this in the last year? Will I use it in the next year? If not, sell it. You can sell on Facebook Marketplace, eBay, Craigslist, Poshmark, or Mercari. There's so many platforms for selling stuff. List everything, price it to sell, get that money, and put it directly toward your $100,000 goal. You could easily generate $5,000, $10,000, or even $15,000 by selling things you don't need. That's a huge head start on your goal. Now, here's what I want you to understand about this second method. Increasing your income is not optional. If you want to reach $100,000 in 2 years and you don't already make a high salary, you can't do it with savings alone. You need multiple income streams, side hustles, overtime, gig work, selling stuff, whatever it takes. Yes, this means you'll be working a lot, 60, 70, or maybe even 80 hours a week. You'll be tired. You won't have much free time. Your social life will suffer, but it's only 24 months. Can you work hard for 2 years to set up the rest of your life? Can you sacrifice 2 years for financial security forever? I think you can. I think that when you look back on it, you'll realize it was the best decision you ever made. So that's method 2. Dramatically increase your income through side hustles and extra work. Stack income sources, work more hours, convert your spare time into money. Combined with method 1, cutting your expenses ruthlessly, this is how you get to $4,000 a month in savings, high income, low expenses, and a massive savings rate. Now, here's the third way to accumulate $100,000 in 2 years. This is crucial because the first 2 methods get you the money, but this method ensures it grows. Invest every single dollar immediately and aggressively. Here's what most people get wrong. They save money and leave it in a savings account earning 1% interest, wondering why they're not getting ahead. But 1% doesn't keep up with inflation. You're actually losing purchasing power. Your money is shrinking in real terms, even though the number looks the same. So you need to invest every dollar you save immediately, not next month, not when you have enough saved up, immediately. As soon as you receive it, put it into investments. Now, what should you invest in? For most people trying to quickly accumulate their first $100,000, I recommend something very simple. A low-cost S&P 500 index fund. Not individual stocks, not cryptocurrency, and not complex strategies. Just a simple index fund that tracks the 500 biggest companies. Why? Because it's diversified, it's low cost, no expertise is required. Historically, it has returned about 10% per year on average. Over 2 years, however, you might not get exactly 10%. The market is volatile in the short term. You might get 15% or you might get 5%. You might even lose money if there's a crash. But here's the thing. You're investing consistently every month $4,000 or more. This means you're buying at different prices. Some months you buy when prices are high. Other months you buy when prices are low, and it averages out. This is called dollar cost averaging. Let me show you the math. Suppose you invest $4,000 per month for 24 months. That's $96,000 invested. If the market returns 10% annually over that period, you'd end up with about $15,000. You invested $96,000, but you have $105,000 because your investments grew. The extra $9,000 is the result of compound interest. But what if the market doesn't return 10% over those 2 years? What if it only returns 5%? Then you would have about $99,000. You'd be a little short. But if you keep going for a few more months, you'll reach $100,000. What if the market crashes and you lose 10%? Then after 2 years, you'd have about $88,000. But here's the thing. That's actually good because you've been buying while prices are down. When the market recovers, which it always does, you're going to have huge gains. The worst thing you can do is stop investing when the market drops. That's when you should invest more aggressively because everything's on sale. That's the basic strategy. Invest every dollar into an S&P 500 index fund through Vanguard, Fidelity, Schwab, or whatever platform you prefer. Keep the fees as low as possible and don't touch it for 2 years. Now, here's something else you can do to accelerate your progress. If you receive any windfalls during these 24 months, tax, refunds, bonuses, gifts, etc., invest all of it immediately. People get a $1,000 tax refund, for example, and spend it on a vacation or shopping. But if you're serious about reaching $100,000, put the entire refund into your investment account. The same goes for birthday money. Same with bonuses. Anything extra goes in too. For 24 months, every dollar that comes into your life has one destination, your investment account. That's the level of commitment required. Now, let me address something important. Some of you might be thinking, what if I lose money in the stock market? Isn't it risky to invest everything? Yes, the stock market is volatile. It goes up and down. But over long periods, it goes up. It has to, because it represents the value of businesses. On average, businesses grow over time. If you're investing for 20 or 30 years, the stock market is one of the safest places for your money. But over 2 years, it's riskier. You might have less than you invested if we hit a crash at the end of 2 years. But here's my perspective. Even if you lose money in the short term, you're developing good habits. You're learning to invest and developing discipline. When the market recovers, which it will, you'll be positioned to benefit. Plus, if you combine all three methods, cutting expenses, increasing income, and investing aggressively, you're likely to reach $100,000, even if investment returns are modest, because you're saving so much that the compound interest is almost irrelevant over just 2 years. The real power of investing shows up later after you have that $100,000. That's when the power of compound interest really kicks in. For now, though, you're just building the habit and starting the process. That's method 3. Invest every single dollar immediately and aggressively. Don't let money sit in savings accounts. Get it invested. Let your money work for you instead of you working for it. All right, now, let me bring all this together because it's important. There are 3 methods to accumulate $100,000 in 2 years or less. First, become obsessed with your savings rate. Cut expenses ruthlessly. Live like you're broke. Track every penny. Save at least $4,000 a month. Second, dramatically increase your income through side hustles and overtime. Add multiple income streams. Work 60, 70, or 80 hours per week if necessary. Convert every spare hour into money. Third, invest every dollar immediately and aggressively. Put it in a low-cost S&P 500 index fund. Don't let it sit in a savings account. Make your money work for you. Now, here's the truth. Most people won't do this. They'll read this advice, decide it sounds too difficult, and give up before they even begin. They'll say, I can't live that frugally, or I don't have time for a side hustle, or the stock market is too risky. And you know what? They're right. They can't because they've already decided that they can't.